Hello friends, this is your host Rakesh Kumar. In the previous video we had discussed about the rounding bottom pattern as a reversal pattern. In this video we are going to see some examples from the live market where the rounding bottom pattern was seen in action, and with the help of those charts I will try to explain you how to trade this pattern in profits and what are the precautions that we have to take while trading so that you don't bust your account. And with that in mind, let's start this video. Just to remind you that in case you have not subscribed to our channel yet, then you can subscribe to it now to get the notifications of the latest video uploads. And if you find this video useful for you, then please press the like button and that will help me a lot.
But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started.
Okay friends, before we go to the examples directly, let us have a small quick recap of what a rounding bottom pattern is. Well friends, in a rounding bottom pattern we have seen that we need a prevailing downtrend, and then there is a consolidation over the period of a few weeks to few months. Then you have a low here, and then after this low you have an advance till the recent reaction high. Then now in the downtrend, if this was a reaction high, I will say that if the price was coming like this, if the price was coming like this and it made a reaction high here, whatever is the last prominent reaction high, from there you have to see that this is your first instance. After till low, this is the period of decline, and from low till the price reaches this reaction high, that is called as advance. Okay, from here till here is decline, from here till here is advance, and after advance, if there is a successful breakout, if the price is able to break above this previous reaction high, then this is called a confirmed breakout only if the price stays above this for 3 days at least. And after that, when the price comes to retest this broken resistance as a support, that is the time when we have to open a buy position. Now this is the ideal textbook example, but in the real market there may be slight difference from this, as this high will not be as perfectly aligned to this breakout and this low will not be as perfect as it looks like here, and there may not be any retest of the broken resistance after the pattern breaks out. But most of the time after the pattern breaks out, it goes for the retest of the broken resistance as the new support. So that is why I'm saying if it is most of the time, then you will get most of the trades, but you have to be patient. So let us see the examples from the live market. Okay friends, this is the daily chart of the Bitcoin. If you see from the here, the price was approximately $19514. 19,514 was the price where the Bitcoin was trading. From there it started its decline, and in the decline it made several reaction highs. This was high, this was again a high. Lower highs, I mean these are the lower highs in the downtrend are the reaction highs. Okay, but the latest reaction high that it made was this. Do you believe me here? This was the latest reaction high. After that it broke all these lows. Okay, and then after declining to approximately 3195 level, which we will consider as a low, the price started moving sideways. Yes, the price started moving sideways, but it started making higher lows. but it started making higher lows. Of course the price was moving sideways, but it was making higher lows. Now if you reconcile this one with this pattern, there was a decline in the Bitcoin. Okay, there was a decline from the reaction high. This was the period of decline. Yes, after that there was a period of advance. After that there was this period of advance. This was the period of advance. After advance there was a breakout. The price stayed higher than 6562 for more than 3 days. Then after it came back to retest this level as new support. You see, it came back to this level as support, and that is actually a place where we have to open the buy position with next level of resistance as target. So in this case, this was our buy position. This was an area of interest for us to open the buy position, and as per the chart, the next levels of resistance were the next highs. First was this one, this area here, then the next area was this one, then the next area was this one. Okay, so these were the targets on the upside. Now you see, if you would have opened a long position here, then you could have booked here also, but it was too close. So and the price has already tested this as a high, so this was very near. So 8537 could have been the first target, and then after 9871 as the second target, which was easily achieved. And your stop loss could have been a very small stop loss here. I hope you get the point here, is that you have to wait for the break level or the breakout level and the resistance to act as the next support before you open a trade. You see, if you would have opened the position somewhere here, then your upside was very limited in this case, because the resistance was, you were very much into the resistance, and then the next resistance was also very close. But here it made you an information edge, and you kept a very small stop loss and a very good risk to reward ratio. So the essence of waiting for the right time to get an opportunity of buying this market is to get a favorable or most favorable risk to reward ratio, which is very important in the risk management. Now the second example that I wanted to share with you is that Euro US dollar. Now here you see, can we compare it with this one? There was a downtrend. Okay, let us see if there was a downtrend. Yes, there was a downtrend. The price was making lower highs. After this, the price was making lower highs. Yes, this was the last lower high that the price made. After that it started a decline up to this place. I'll mark it here. And then after it started an advance. In the process of this advance, it broke through this reaction high. You see here in this particular candle, it broke out, and then after breakout it came back to this level again to retest this as a support. Now this is the place where you have to open the buy position. Friend, this is a place where you have to open the buy position. Okay, and your stop loss will be below this, and your take profit will be at the next level of resistance. Now where is the next level of resistance? If you remember, or if you don't remember, just take out scroll through my previous videos where I have explained how to draw the support and the resistance lines, and you will know. In fact, for this, these reaction highs are going to be our next levels of target. So the first target will be this high, second target will be this high, and if there is another high from this, then that will be our third target, which is this in this case. So we have achieved all the targets in this one, but that does not necessarily mean that the next time when you see a rounding bottom, this will happen. There is a possibility that the price may reverse from any place, from any resistance. There is a possibility that after breaking higher, the price may reverse from here itself. by making a double top or whatever. The price can go like this also. Well, that is just a possibility. So to limit your losses, you have to keep a small stop loss below, and once you reach the resistance, it is better to book half of your profits and put the stop loss at the break even and let the trade run free for you. Well, that is also a very good technique. Well friends, that's all for this video. I had only 2 examples for you. If you want more examples from the rounding bottom, you can tell me in the comment section. If you have any question regarding any of the patterns which I have taught till now in the videos, you can write below the video in the comment section if you have any questions regarding them. Now in the end message, I just wanted to tell you that please bear in mind that opening the trades are much easier than managing them. You have to learn to manage the trades. Opening are very easy, just click and the trade is open, but how to manage them, that is very important. Now I would request you that if you have learned the proper risk management, then only you enter the trade, and never put more than 1% of your capital on any single trade. You can risk more, but you will have to lose more in that case. 1% of your capital, that's all, and open the position only if you have a solid risk to reward ratio of minimum 1:3. If you don't have 1:3 risk to reward ratio, don't open the position. That is my humble advice to you. That's all for this video friends. See you in the next video with another surprise with another chart pattern. Thank you very much for watching the video.